Morning, guys. Welcome back. It's been a long time since I guess I made a video. Tax season, my excuse. And, but with the extension, a little sanity in my life. So I thought I might as well make some videos on the most, I guess, the pressing topics that everybody's interested in. Today, I will be going over the unemployment exclusion that a lot of people got. You may or may not be aware of it. If you're not, definitely stay tuned. We will make sure by the end of this video, you will have an idea what to do with it. If you filed, what to do with it. If you have not, how it will affect you. So basically, under the American Rescue Plan, Biden government made $10,200 non-taxable of unemployment only for the year 2020. So if you are one of those people, and majority of people probably listening to this video did get some form of unemployment, whether it was through your employer or was it a PUA as a pandemic for your as a gig worker, you got some form of it. At the end of the day, it's a pretty simple credit. What you will end up doing is shaving off 10,200 off whatever the unemployment was paid for. Now, this is per person. Technically, it is a little different from the rest of the credits where you kind of phase it off over your income. This one, it applies as merit filing joint, $150,000 or less. If you had, you do get to take it. That being said, if you are over that AGI, you don't get anything. So it kind of sucks if you are at that, you probably at the 150, 160. I mean, it's kind of like a take it or leave it deal. It doesn't phase off. So the magic for a merit filing joint is $150,000. And if you are under that limit as an AGI, or the income as an AGI, you do get to take 10,200 each off from your unemployment amount that you received. That being said, if you do have both you and your spouse got the unemployment, each one of you will take off 10,200. It is not per family, it's per individual. Interestingly, I did have a client in that situation, and just to think about how much this does help is this client owed over $3,000 based on whatever the numbers fell for her in terms of the tax bracket. We were kind of like just in that 22% a bracket for her. And the second this was done, I did put all my clients on hold, the ones that did have some form of unemployment. And once the things were more clear and we have a better idea, how this will go, we were literally able to shave off $2,000 off the tax bill. And as you can imagine, in today's day and age, $2,000 goes a long way. So I'm sure this exclusion, exclusion is going to help a lot of people. That being said, since you can take 10,200 each spouse, it is individually calculated and not as a whole. So even though if you did get, if you're married, your income is under $150,000 as an AGI, you can take off 20,400 as a married couple. Keep in mind, you do have to separately be making over 10,200 to be deducted. So let's say one of the spouses did get $15,000 and the other got $5,000. You are $20,000 total. You don't get to take the entire $20,000 off because it's 10,200 each. You will shave off 10,200 from the spouses, whoever got the $15,000 in unemployment, and only $5,000 from the spouse who got 5,000. So you will be at 15,200 instead of the 20,000, because you're not going to you can't like kind of even it out between the two of you, kind of net it out between the two of you. It has to be individually based. Now, if you are one of those people who were able to file, or who did file before this plan became law, and basically paid taxes on that extra income, you had the money, you were able to do it, do not go rushing amend it. IRS has made it very clear there is no need to amend the return that were already filed before this exclusion became the law, they will take care of it on their end. Now, if they don't, or the calculation is not right, we'll see, the more guidance may come, but I'm pretty sure the calculation is quite straightforward, so it should not be too many difference, or, there are too many mistakes, like, for the lack of a better word, in terms of the credit not being calculated correctly. So again, if you've already filed, do not go rushing for an amendment. They will send you your due credit, one form or the other. Either you, at the end of the day, if you still haven't paid it, it will be adjusted as to what is drawn, or most likely, if you have already paid it, you'll get a refund corresponding, however the calculation makes sense. So that's in terms of the unemployment. If you have any questions or concerns, please do comment in the section below. I do like to read each one of them and reply as well. And if this is something that you would like to keep abreast with as to what's happening with the tax, finance, personal financial situation, please do like and subscribe. I would greatly appreciate it. That being said, I am looking to do another video on a very interesting topic, and that is your child tax credit. That is certainly something that a lot of people are interested in. I will have that video in about another day or two, so look out for it. And if you do subscribe, you will get to hear it as soon as it is posted. That being said, I do like to end my videos on usually a positive quote. We are in a tax season, so I decided let's do tax quotes or tax memes. And the one I found today is, again, it's just a meme, and here it goes. I wonder if I can claim the federal government as a dependent on my tax return this year. And we all wish based on, how much we pay into the system. Anyways, you guys have a great day, and I will see you soon. Take care.